Welcome back, everybody. Sive is here with the Forex Peace Army.com and our regular update on the Bitcoin market. So actually, since our last discussion on Thursday, we've got unpleasant surprise with the performance on the Bitcoin market. Those of you who are actually keeping an eye on the news stream from the Bitcoin, you probably should know that it was the actually massive sell-off from the Galaxy. So just we have prepared the research update on the technical picture. Right in the evening, the Galaxy has sold really outstanding amount of the Bitcoins, which actually has led to the downside breakout. So this is purely market makers tricks. You could see, and I will show you a bit later on lower time frames, that this action was actually finished as fast as it has started. And currently, by current market performance, you could get the confirmation that indeed this was not triggered by particular some market power. This is external intentional impact of the activity of the Galaxy. I don't know what they were doing. Maybe they saw sufficient amount of the stop orders stand below the lows that we have also talked about to cover and close their positions that they have initially started to open, or some other reasons for selling. It's difficult to say because it's market makers' game. We really do not have any tools to trying to just compete with them on this very short-term trading, especially with the size of the positions that they could operate. So this is, well, not our task actually. But that was not really pleasant. At the same time, it shows that the bullish context that we discussed is still valid, and actually it hasn't been hurt with this accident. So on the monthly chart, on the weekly chart, we do not see something special. Still, here are the same targets that we have talked about. As 127 is one major all-time XOP extension. And on the weekly chart, you also actually do not see something really new. This market stands in a tight range for a second week. Trend remains bullish. Market is not at overbought. Here we have a local OP around 134.5. So it's even more high. It's even higher than the monthly target. Now it's the most interesting things. So on the daily chart, you could see what was the reaction on this Galaxy sell-off. Spike down and fast return back up. So this is typical. It's kind of the classical bearish trap when the market breaks the pennant patch in the opposite direction, fails, return it back up. It means that the upward breakout should follow, and actually the market is already trying to do this. So we still think that this is a kind of the bullish dynamic pressure performance. So market stands bearish, but price action is not. It stands mostly flat. Yes, we could reshape this pennant with this kind of to the flag formation or something like this. But anyway, this will be upward continuation pattern. But for me, more important that this was the actually failed attempt to break out. So this is more important from the technical point of view. So I would treat this situation as bullish on the daily chart with this type of the performance. So rock hard support here is 113.50 approximately. Here you can see confluence, previous tops, and in general, while market stands above this area, it keeps long-term bullish context intact. So but that's for longer-term trading. If you trade on high time frames, then probably you could use it for stop hiding below this area if you take the position for the long term. In the shorter term, we should focus on most wrestling swing and actually this type of the performance inside of the triangle. So on the 4 time frame chart, you could see how it has happened. So we can see that this actually has happened just within the 4-hour candle. This market just dropped and immediately reverse up. So I would treat this action in a way of some kind of the engulfing or something like this. So because it was erased fast as soon as the pressure from the Galaxy has been stopped. So as I said, here was some stops below this area. This is well recognized 116 support. Maybe they saw market, they saw amount of the stop orders, and they could think that it will be enough when they will start selling, increasing the bearish pressure here. Maybe they thought that it will be enough to close this position with the stops and buying stops that stands right here. So they just calculated what the position they need to press it down. Then they saw the stops here and maybe thought that it will be a good trade. I don't know. This is the typical tricks of the market makers. They usually do this stuff. So if we wouldn't have the sell-off from the Galaxy, I'm sure that our hand shorts that we talked about here would have the good result, because here's obviously was the bullish context, and actually the market already started some upward prediction, but then you can see what has happened. Now you can see market returns right back up to the point where it was before the sell-off. This is also indication of the bullish sentiment. And currently on the hourly chart, we will be watching for the same pattern, but with just a bigger scale. This is our previous hand shorts that we talked about. You can see that even market started this kind of action from the right shoulder. But now we will have to increase the scale due to, you can see this recent trick from the Galaxy. Now it will be big hand shoulders, a bit larger. Something like this. So here's also you can see some butterfly has been formed. So I'm surprised if we get here some extension, some kind of 127, right? So we have here some 127 head and shoulders pattern based on this butterfly, so everything follows the classical shape. And for position taking, we don't consider taking the shorts for now. Watching for this potential pattern, as usual, keep an eye on the 117 area, or better to say 116 and 50, 70. So this fib support here. So watch this pattern in both ways, as usually we do. Yes, our primary basic scenario is long, bullish position taking, but also keep an eye on the possible failure. If you'll see that market still is moving lower, some kind of behaves heavy, so dropping down to the 116, 115.50, that will be a sign of the failure. And in this case, it's better to reverse the position, because big chances that market will take it out of these lows. Although, as I said, I treat this as a tail scenario. Basic scenario mostly based on the daily chart performance that we have the spike, fake breakout of the triangle. So overall, how market reacts on this sell-off makes me think that the bullish context is still valid here. So that's all for now. Let's see what will happen. Hopefully this time we will not get any bad surprise from the market makers.